Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, I want to thank everyone that showed up at the live stream yesterday. We had quite an exciting stream. Markets were down heavy. The S&P down 2.6, NASDAQ down 2.6, and the Russell down 1.9. But more importantly, something I talked about on the live stream yesterday was that I expected to see our database on WaveTech, which I'll go through in details here in a few minutes, see quite a few new sell signals. I thought maybe 5,000. Well, the end was 8,702 sell signals. This is an amazing number, and over the past couple days, we've actually seen over 10,000 symbols of our entire database of 16,500 actually move out of the markets on a short-term basis. I will go through in detail what I think this means in this broadcast when I go through the database, but more importantly, what we're seeing here is broken market sentiment. And when we see this type of action happen, what typically goes on is even if the market rallies, there's plenty of resistance overhead. So if nothing else, we've set up a trading range, but it does appear, which I'll go through in the technical section here in a few minutes, that there's something even larger potentially going on. There's still some support levels hanging around that are important, but we need to be watching these things very closely. But this database situation is very real and very big. As we look at yesterday, we saw all kinds of things happen, right? We saw the GameStop rally, this crazy short squeeze that's going on, and we're seeing a lot of rhetoric, which in my opinion, I've become very nervous about, and nervous from a couple things. I saw the chair of the NASDAQ coming out and actually talking against day trading. And it's getting a little scary. I'm not going to go in depth at the moment, but I am going to show you a screen, and I'm going to mention this right now. I'm so concerned. We don't do day trading or anything on this channel, so I'm not expecting to see things get shut down. That's not what I'm worried about. But I want to make sure that you guys sign up. If you go to thekendallreport.com, all we get is an email address and your name, and we don't send out very much, but I want to make sure that we have the ability to contact you if you enjoy my work. I don't want to lose that contact with you. I have no idea what's going on in this planet right now or what type of scrutiny is going to come across the board. So it's really getting a little strange. I hate to even mention that in the middle of this commentary, but this is something we need to do. I'll show you the screen in a minute. It actually comes up. If you go back to the beginning of the video, it shows you the exact page to go to. It's very simple, and like I said, we don't spam you and we don't do any of that stuff, but I do want to make sure I have that contact. So let's get back into the crux of what's going on here today. But as we look at yesterday, we saw all this amazing selling coming on, but after the close, everybody was looking to the Apple, Facebook, and Tesla earnings, and all of them missed. They missed big. Last time I took a look, Apple was down 4%, Tesla down 7%, and Facebook down roughly 5% in round numbers. So we're seeing a lot of weakness in those stocks and a lot of disappointment, but we also saw most of the stocks moving up into the earnings, and so it wasn't maybe a disappointment, but it was somewhat of a lot of selling. Is always the case of, to sell the fact, or otherwise everybody bid the market into the news and then sell the news when it comes out. That's maybe what we're seeing, maybe nothing more dramatic than that. We also saw the same thing on Microsoft that came out yesterday. They couldn't have made better earnings than what we saw them do. And in the end, they ended up 0.3 on the day. It was an amazing earnings report, I talk about this a lot. I mentioned it in the live stream, but there's no VIG in the market. There's no momentum building, nothing to build on from the standpoint of how the trend was unfolding. I've been talking about this particular event for multiple days, actually going back for about 2 weeks. I'll show you in the technical section that the momentum just has not been participating, and it's been worrisome from my viewpoint and how the configuration is setting up, and that we could start to see some decline. Well, some of the declines that I mentioned in last night's video have already happened. So I'll go through the details on what the expectations are from here, but there's definitely a break in the sentiment on a short-term basis. Whether this bleeds over into the markets coming into Friday, we'll have to see how we close. Friday is also the last day of the month, and some folks were asking today on the live stream, is this part of some end of the month rebalancing? I don't think so. I think this is all related to just the market sentiment and people being very nervous at the levels that we're trading. And this is pretty typical at these high levels that we're trading at. Is this the top? That's hard to tell just yet. But oftentimes we had an RXT sell the other day. We get that. We get this massive selling in the database. When you see the database output, you'll understand even more about what's going on. And I do expect to see some of these support levels hold, but if they don't, I'll lay out everything so you know exactly what to expect. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I begin with the review of the WaveTech database, as I mentioned in the opening comments, we had 8,702 sell signals, and we had 231 buy signals. So this is substantial, a huge negative rotation. I've been talking about the 62% level for about 2 weeks on the database. Now we traded up to around 72, 74% bullish. I was talking to you then about it being a little extended. A lot of things started getting extended. We actually saw the average current profit get to 91% of an expectation on the models, and this is right where it started to roll over. We went from 70% down to 63. We printed 58 overnight on yesterday's report, and now we're at 35.47. And I mentioned to you in last night that the key level was going to be 48% and then 42%. Well, we've taken all that out. Just like when I go through the technicals, we took out the 10-period moving average to 21, and we went all the way to the 40-period moving average. So it just went through all of the things that you would relate to being some sort of support in this market. So everything has been completely wiped out right now. We're at 35.47. The last time we saw something like this was back on June 9th, when we saw a fairly decent rollover at that time. Now, we're at much different metrics when we look at this market. We're just printed an all-time high just several days ago, and here we are seeing this rollover, and this is a substantial selling. And as I mentioned also in the opening comments, that when these types of things happen, this database doesn't recover very quickly. We're looking at a minimum of probably 3 to 5 weeks to repair the damage that's been done technically in all these patterns. And I've talked to you folks about this before. This is a unique situation that we're in that we can actually watch 16,424 symbols and watch them through the same methodology and report exactly what's going on with these trades. So this is significant in that this many trades have been absolutely demolished. Now you can see that the number of stocks long are 5,826, total database 16,424. So we're looking at well over 10,000, almost 10,800 symbols have been sold out of the database, which that means is that the trends have been demolished. They're no longer in existence on a short-term level. And as we come into Friday, I'll be talking to you about the database on an intermediate level, and that's going to be key. It's also going to represent something I've been talking about, which is the anniversary of the events that happened last year. This is almost an instant replay of last year right now, in that we saw massive amount of selling coming in on the 21st of January last year, and that was primarily seeing that in the intermediate database. We have not seen that yet. The intermediate database is still at 81% long, but that is going to change substantially on Friday, and I'll talk to you more about that at that time. As I begin with the S&P futures, one of the things I didn't mention in the opening comments is that we also have the GDP coming out tomorrow. That's expected to be approximately 4.4% positive. The last time we were up 39%, which is an insane number. That had everything to do with the collapse that we saw earlier in 2020. But we also have the claims and the continuing claims, and I'm expecting some negative numbers out of these continuing claims. I think this is going to get worse as the weeks go by. We've just seen tons of jobs eliminated by the new administration. They're taking these jobs out. Whether they're going to be replaced down the road or not doesn't matter. It is happening now, and it's going to cause unemployment. It's going to probably cause the market sentiment to decline even further. So as we look at the technicals here, as I mentioned, we have went all the way through all three averages. Yesterday I was talking about the support at the 10-period moving average. Well, that didn't even matter. I thought, okay, we'll trade to the 21-period moving average. That didn't matter. We traded below the 40-day moving average. Yesterday's 40-period moving average was 37.2964, and the low was 37.0650. That number actually printed after the close of the cash market. So this is the futures we're looking at. But we're now continuing to trade lower right now, down 17 handles. We've seen the market overnight trade is up as much of about 5 or 6 handles plus, and we've seen them down about 20, down about 45 handles over at the extreme. So this has been pretty active pattern that's been unfolding. We have traded 176,500 contracts already this evening. Now it is a little later, I'm getting this video done, but there's a lot of stuff going on. As we go over to the SPX, we see that also that same pattern. And one of the things that I want to bring up, that yesterday was a significant day in that we saw the total volume of all the exchanges finish at 14,046,000,000 plus shares. This is the most that the market has ever traded in any day in the history of the stock market. And all of this has to do with fractional shares and the amount of new accounts and people participating in this markets right now. This is unbelievable, these numbers. But as we go back to the SPX and look at that, we've traded down to the support levels. I said there's a couple key levels out there. I talked a lot about it on the live stream yesterday. 37.37 is that key number. And if we get below that level, there's nothing on the daily chart that's going to indicate any type of support. I'm going to show you on the weekly chart here that the 10-week moving average is 37.35. So I've talked a lot about on this channel 30 clusters of numbers. So 37.35, 37.37. This is the 40-day, the 10-week moving average. A close below that level will indicate that we are possibly going down to the 35.71. Now, these are numbers I mentioned in last night's video. I talked about 35.71 to the 3,500 level. That seemed fairly impossible yesterday, but after seeing a 100-point decline on the S&P yesterday, anything's possible in this market. But we are likely to see a bounce. We still have a ppm value on ppm1 of 0.52. This suggests there's a 60% probability that we will remain above that level on Friday. So this tells us that right at the moment, 60% probability that 37.35 will hold. We're trading lower on the futures overnight, so that is going to be challenged. Tomorrow's close is going to be key, so watch for a close under 37.35, but we're going to need this most importantly on Friday's close. As we look at the daily SPX, R1 is 37.65, so my expectation is that we'll get an R1 S2 number, which will be 37.65 to the potential of 37.19 on the downside. If we get through that level, you can see the numbers here: S3 37.02, STX 36.87. So this thing is a bit out of control. We'll see if we can get any type of bounce here. Nothing that the Fed said yesterday, nothing that came out of the markets, anywhere you looked, was positive or was able to support the market. Even the great earnings reports that we saw, none of that mattered yesterday. As we look at the NASDAQ, it is a very interesting configuration. It's, as I've mentioned many times in the past, it has a bit stronger overall formation. We did not trade down to the 40 period moving average, which is at 12,807. The medium average, 13,013. Above that number right now at 13,028. We've seen it penetrated because we trade down to 12,955 overnight. But the NASDAQ is down 78 handles right now, 0.6 on the session. And we're seeing PPMs cut through first, second derivative, all three of them, PPM 1, 2, and 3, all going through these numbers. And this is significant, telling us that we're likely to go down toward that 40-day moving average on the NASDAQ, 12,807. We're going to go to the weekly chart just to pick up exactly what is going on there. We're very close to trading to the STX number. 12,930 is S3, and we're looking at that number printing below that yesterday at a 12,884. So we get down to the extreme, which would be 12,797, will align itself with that 40-day and the 10-week moving average, which is at 12,774. On the upside, I think it's going to be somewhat limited. As we go back to the daily chart for a second here, you're going to see that the expectations is probably to trade back toward the 10-period moving average, 13,183. The high's been 13,129 so far. We're 13,27 right now, and the low is 12,955. Like I said, we could trade down to as low as the 40-day moving average. I really don't see anything that's positive that's going to cause this market to bounce big, but a penetration of 13,206 would be a positive and suggest a move towards R2. But expectations, just like in the S&P, an R1 S2 number for Thursday's action. The final market that I will cover tonight is gold. Gold continues to drift lower. We continue to trade below the 10-period moving average. That's at 10-period moving average 1853. Last trade is 1837. So we're looking at this thing moving toward the extreme, which is 1829. That's the STX number. Low so far 1835. If we did trade through 1835, I've talked about this number quite a bit. It shows up on the weekly chart, and that number is at the 1750 level. Below that, we're looking at basically an 1800 test, possibly to 1795. The extreme for the week is 1774. We did see a little bounce in the Dow yesterday. We're continuing to see a slight uptick and a slight bid in the Dow, and I expect that the Dow bid is going to last. I discussed this in the live stream. If you didn't see that, please go back and watch that section on the Dow. But this pattern is continuing to be weak, and I do expect to see it hold these numbers between 1817 and the 1795, but there's no trade in this market at this time, even though my expectation is that I think this market is bottoming. This will complete the video for tonight. Thank you so much for watching. Thank you for all of you that participated in the live stream yesterday, and I will talk to you tomorrow night.